Welcome to the Man in Charge, the show where we talk financial stewardship and amongst other things. So, who's the man in charge? The man in charge is Jesus Christ, who sits at the right hand of the Father. So, my wife and I moved to Texas a couple of years ago. We moved out of California. Both of us grew up there, and that's all we knew. We lived there for I lived there for 30 years. She for 30 years, yeah, 30 plus years. So did she. And one of the things that we both had in common is that we wanted to move out of California because of all the craziness that was going on. CRT was rampant, and we did not want to raise children in a toxic wasteland. So we've been here in Texas for 2 years now, and we went out last last night. We went to the mall in San Antonio, and we started seeing some crazy things that we haven't seen ever. Example number one: we were walking around and saw a a man, and this man was not in shape. I would say he was overweight, and he was probably in his, I want to say 30s, maybe close to 40s. I'm not sure. But we saw this man wearing a crop top. That was shocking, to say the least. I have never seen a man wear a small shirt and their guts sticking out. That was just shock. I think that'd be shocking to anyone that hasn't seen it before. So we saw that. 10 minutes later, we see another man wearing the same thing, and it was it was unexpected since we moved out here, and we thought that that was not going to be part of the culture. Well, apparently it is, and my wife and I started talking about it because it was a little different, and she saw the look on my face, and she said, "Yeah, uh, I like." It's funny when I see you react to the crazy out here, or whenever we see crazy. But anyways, we started noticing LGBTQ stuff in stores and um, in in the mall, and it's becoming more common. It's being normalized. It's becoming part of the culture. So anything that pushes against that culture is going to be a minority eventually. So it's something that uh, our families need to prepare for. Um, so yeah, we're gonna be talking about Chick-Fil-A because it looks like Chick-Fil-A is also maybe heading in another direction. Historically, Chick-Fil-A has been a Christian company, and it's uh, I think maybe a few months ago, Chick-Fil-A hired a director of diversity, equity, and inclusivity. And it's funny to me because that sounded a lot like uh, an HR position maybe a few years ago, but now I feel that HR has been transforming into this new thing where it's not being labeled as human resources, but now it's including the inclusivity, equality, and diversity, which is completely different from what it used to be. Apparently, Chick-fil-A is more concerned on serving a diverse culture. I'm not entirely sure. Anyways, yeah, that happened a couple of months ago, and there's been some backlash. Again, it's different because we think of Chick-fil-A as a Christian company. Most people do, and ever since I've known Chick-fil-A, there's always been this stigma behind it when people speak on it or speak of Chick-fil-A. Uh, it's that they are racist and that they hate the LGBTQ community, but apparently not so much anymore. It seems that now there is a this other aspect of Chick-fil-A that is no longer associated with Christianity. Now it's it being more accepting. I'm not entirely sure who they are trying to target, but it whenever there is diversity, equity, and equality, and when that language is used, it um, it, in the last maybe few years, it's been geared more towards sexual deviancy, the allowance of uh, perverts and those sorts of people, um, where there's no longer a stigma. So I believe that's where they're heading. But anyways, Chick-fil-A is a private company, so their financials are not out in the open. So there's very little knowledge as to whether this company is being affected by the by them selling out to that crowd. Um, but I started that sparked my interest because there's other competitors to Chick-fil-A, and one of the competitors that I came up with it's this bigger company called Restaurant Brands, and Restaurant Brands I believe is international. Restaurant Brands International is a parent company to a lot of these smaller. I wouldn't call them small, but they are they are no they are we know these companies. Uh, Let me pull those up for you. Let's see. So Restaurant Brands International is a parent company to. Oh man, it should have more information on it, but let me see. Give me 1 second. Yeah, so it holds companies like Burger King, Popeyes, Tim Horton, and Firehouse Subs. So as I was looking into Chick-fil-A and I wanted to explore what the competitors were, I noticed that Restaurant Brands was had a very solid price to earnings ratio. It was actually a very low. Uh, in the last let's see, in the last couple of years, let me pull up the stock for you so you can take a look. But the price is very attractive, and I'm not sure if it's maybe with because of the affordability of its food that there is some attractiveness to that. Okay, so I'm gonna pull this up for you guys so you guys can take a look. Let's see. So as you see, yeah, today is June 11th, 2023, and the price is 75.16. And if we take a look at the last 6 months, there has been a 12% increase. That is that is pretty solid. Year to date, we see 16%. So that's some good returns. In the last month, 3% increase. But nevertheless, it is I would consider this a value stock, very attractive. And yeah, its P ratio is 23. You compare that, let's see, with something like McDonald's. Let's look at McDonald's price. Um, yeah, we're at 286. It's pretty pricey. It's 30.78 on its PE ratio. Again, that's the price to earnings ratio. That's a good metric to look at when analyzing stocks and comparing them within a certain industry. So we see that when we compare McDonald's to Restaurant Brands, there is some value behind it. So there is an alternative to Chick-fil-A. If we want to, as Christians, want to perhaps look for other options when we're eating out with the family, even though it might not be the healthiest thing. Hey, you're in a rush. There are other alternatives to Chick-fil-A. I know Popeyes released a chicken sandwich that was equivalent to the Chick-fil-A sandwich. So there are alternatives, and looking at stocks, if we want to measure some of the, I mean, we'll keep track of this Chick-fil-A fiasco and see where they head. But if they continue in the same trend, there may be uh, some financial circumstances to that, and we may even see an increase in restaurant brands. At least people flocking towards that direction, especially during inflation. Prices are very high. In a lot of these companies do have a model where their volume or their prices of their products are very low, but they're focused more on volume. So that may be a good direction to head towards if we're looking at individual stocks. Again, don't take everything I say uh, and run with it, but just do your homework. Do look at their balance sheets. Look further into how much debt they're operating on, and see if they're if that's a company that you want to invest in. But hey, that looks good. It looks good to me, and maybe something that we want to have in our radar. So another thing I want to talk about is VIX. It's a VIX is a it measures volatility in the market when it comes to option prices in the next in the short term, and the VIX indice has or the VIX index is really low right now, which means there's low volatility in option prices in the short term, and that is a good indicator that we may be uh, getting out of this recession and maybe going into a bull market. And let's pull up that VIX volatility index. I thought it was that's just a description. Let's look. So VIX. So there has been, yeah, it's been decreasing in the last month. We see a 80% decrease on that, which is a good indicator of volatility in the short term. And this is a something we want to to track so that we may be equipped with more information as to uh, what the markets are doing, even when we look at options. And this tracks the S&P 500. So if you look back at in 2020, this is where volatility was the highest in the last 5 years, and we know exactly what was happening then. There was this little thing called coronavirus that impacted the world in unparalleled ways. So that's something we may want to look at when we're tracking the market. But anyhow, that's there's a lot of noise happening right now, and I was talking to a friend that was struggling a bit with credit and other things such as investing, and we began to talk, and we started a conversation as to what we can be doing now, since we are currently in hard times when it comes to inflation. We go to the grocery store, prices are abnormally high, and he was very interested in quick returns in the market and how we can do that. Um, I'm very vocal as to the stocks that I pick, and how we create profits. So when we pick individual stocks, but it requires a good foundation when you're looking at investing. And once we went down the reasons why he was in the financial circumstances that he's currently in, I started noticing that there was a problem with understanding savings. Savings is the foundation to being a good financial steward. Tracking your expenses, tracking uh, how much is coming in, how much is going out, and coming up with a savings rate, a healthy savings rate. We want to be upwards of 10% if possible. I know there's a lot of things that can hinder that, but that's where we want to be. And so I think there is a savings does get it does have a bad rap because it's avoids consumption, and consumption is the biggest hurdle to cross when attacking savings. And savings is not enjoyable when you first learn how to do it. It is difficult to get there, but to become a good investor and a good steward of your finances, it starts with building good habits towards savings. Creating a healthy savings return is crucial. So that's something I also wanted to bring up during this episode is, do we have a good grasp on our savings? Do we know what our savings rate currently is? If we're not there, how can we get to a good savings rate? One of my goals for the longest was getting to a 40% savings rate, and that is very difficult to get to. I think the closest that I got to that, I believe it was like around 27%. That was the highest savings rate that I had for. I think I had that for maybe a few months, and that was awesome. Those savings got invested into the market, and some of it was, well, not all of it, because you also want a healthy cushion to sit on. You want to be liquid, and especially during these markets, liquidity is number one. But anyways, once we start focusing on the higher savings, then we can start looking into different companies. So that's something I wanted to talk about and encourage everyone to sit down and calculate their savings rate. And we can talk about that on another episode, how we can effectively do that and what is a good plan, what's a good plan of attack to get to a good savings rate. And last, I do want to touch on Target. It looks like Target is still feeling the financial loss because of their participation in Pride Month, participating in the culture of death. There's still some repercussions to being a voice for a minority, and it hasn't increased sales. Sales have been decreasing, and I haven't looked at their stock price, but it may be. Let's see how they handle this. Maybe if they start turning it around and you start seeing less and less of the Pride stuff, maybe you want to help in doing that. Maybe stop giving them money. I also saw that Bitcoin is there's been a sell-off on Bitcoin. Bitcoin seems to be hurting nowadays, especially during the high inflation rates, and it looks like it's not doing well, but that's all across the board. It also looks like other cryptocurrencies are hurting, and even Robinhood is letting go of some of those cryptocurrencies and not participating in that financial class. Bitcoin cryptocurrencies. I'm not a huge advocate. It's very hard to tell whether it's a good investment. Is it even an investment? It looks like it's a currency, so how can you have a currency and an investment at the same time? What I've heard is that the the financial technology behind it is the reason why these are even worth your time. But even then, it seems like Bitcoin and all of those other cryptocurrencies like Dogecoin, they're more of a fad. And myself, I am a contrarian. If something's very popular, I am wary. If something is very attractive, um, most of the times it's because there is a groupthink that helps a lot of these financial financial classes. Same thing with gold. I mean, it's you can say that about everything, but cryptocurrency has no financial sheet that you can look at. There is, I think, uh, most of the statistical analysis that you can do on something like a cryptocurrency is not the traditional stuff like, but it's you, yeah, but there's very little you can look at. But anyways, yeah, that's something I wanted to talk on. I wanted to bring that up to see, at least to inform all of us on the updates on crypto. So yeah, there's those are the things that I want to talk on. I wanted to recap Chick-Fil-A and what's going on with Chick-Fil-A. They have very tasty sandwiches, but it seems that they are going on a different path. The path that is uh, that is crowded with LGBTQ and perverse agendas. Maybe, perhaps, we'll keep a track on that and see what happens in the future. Target is still doing poorly. Bud Light is also um, feeling some economical loss because of Dylan Mulvaney, and Bitcoin is also on the going down, or its value or price is decreasing. And hey, restaurant brands, it seems like an attractive stock. It is selling at a low price to earnings ratio. It seems that it is going to increase. So something that we may want to look at. VIX is a good market indicator on volatility on option prices on the short term. Something that we also could look at when we are investing. If it seems that there is an upward trend in the S&P 500. It may be that we're out of the recession and going into a bull. So, hey, that's good information to have, and we may want to reallocate some of our resources into the market if we're not currently doing that. And also savings. Savings is the key to becoming a good investor. Allocating your resources in a way that avoids consumption. Consumption is the hindrance of good stewardship. So those are things that I wanted to talk about. We'll continue to see what goes on during Pride Month. This month, it's a good month. It's the summer is here. It's you can start doing things around communities, and you can go to the beach. You can go to the lake. So many things you can do during the summer. Unfortunately, it is being shadowed by perversity, and such a shame. Well, until next time, We'll see you guys, and God bless.